We have gathered here to explore and discuss the challenges and opportunities in the corporate finance advisory sector, particularly focusing on how technology can empower financial advisors and streamline their process. This event is a testament to our collective commitment to enhancing the corporate finance landscape in India and beyond. Today's event will focus on the Growth Partnership program brought to you by UB, which would cover extensive collaboration in partnership with corporate finance advisors and professionals. We would aim to revolutionize the facilitation of debt requirements for borrowers. UB Credit Market is India's largest credit marketplace, connecting enterprises with the right set of lenders. It offers a variety of debt instruments, including business loans, supply chain financing, and corporate bonds. UB allows borrowers to choose from over 750 top lenders to find the best credit options. So today's event is jointly organized by SME Chamber of India and SME Credit Check. So both organizations, and we are having our office over here next door in Samruddhi Venture Park. And we are delighted. I'm waiting for Mr. Chandrakant Salunke, who is a founder and president of SME Chamber of India, for his welcome speech. But in meantime, let's start with Mr. Chandrasekhar. He's a vice president, client servicing group, mid and large corporate UB. And his topic is key challenges faced by corporate finance advisors during the debt syndication process of their client, and how one can overcome those challenges. Over to you, Mr. Chandra.
Hi, thank you for coming here. Spending some time in the evening. So just thought of going ahead and taking up. So just to introduce myself, I have been working for almost 14 years now. Primarily, most of my career was in large corporate banking, associated with banks like ICICI, Axis, and Kotak. Completely into credit, primarily. So managing corporates like Infosys, Wipro, Hinduja, in terms of loan tune size up to 20,000 crores. So post that, I joined UB 3 years back, where I'm currently representing now. So this has been a journey where I have learned a lot, primarily after coming from a banking where the mode of operation was completely different than the way a fintech works. So that has given me a good set of idea to how to take up any kind of transactions, any kind of credit to the doorstep and service this. So so if I see, sorry, thanks. So if I see currently, as on December, total bank lending size is close to 36.65 trillion. So this is as per the data available with us in India, primarily due to the growth of economy, growth of infrastructure-led spaces, that the market is so well diversified that we have eminent scope to grow ourselves in terms of leveraging debt to the right set of people. So because of this, corporate debt rate will keep on rising as India, because India GDP itself is growing at a stable rate. India economy itself is performing at a decent pace. So primarily, obviously, all the sectors, be it infra or any kind of segments, you can take any kind of industry, pharmaceutical, textile, all segments will eventually grow. And that gives us a larger scope to syndicate those debts. So that is the reason why there is a larger collaboration needed to service those kind of requirement, which is emerging pan-India currently. So you can add to it so that if there are some challenges which I feel, which I have noted down, might be missing something which I feel can be added by any of us here. So primarily, current challenges in advisory role after coming and joining UB, because from the bank angle, the lens was very different than the angle our lens channel partner can have, a growth partner can have in assessing it. First was a due diligence. So eventually what happens, if any credit proposal comes, we spend a lot of time analyzing those proposals. And at the end, what happens after spending a month, we come to know there are some diligence checks which we have not done, which are very critical, and because of it, the proposal can't move ahead. So we have faced a lot of such cases in banking scenario also and outside banking also, where we spent a lot of time in analyzing a proposal, and once we are confident enough to go ahead, but because of small diligence check which we have not done initially, maybe it's related to SMA reporting. I think everybody would be aware that SMA reporting is something which is taken very seriously by a bank. When a client is reported SMA 2 or SMA 3, we may miss those aspects while doing it. So due diligence about KYC, CIBIL checks, SMAs, which are initial checks, which has to be thorough and correct, needs to be ascertained while taking up the discussions. So generally, sometimes we miss those aspects and go ahead on the transaction. And after running for a month, we come to know that this transaction would not fall into place. So collaboratively, we waste a lot of time handling those kind of transactions. So ideally, we should be thorough on those. So one challenge which I identify that we bring in many corporates, we deal with many corporates, but this part we critically miss initially on the due diligence of the company. Then there is limited resource. So when I was in a bank, I used to work on one proposal at a time or maximum 2 to 3 proposals at a time. I can't go beyond that. Reason being, I'm overloaded with work. When I was handling South Head, when I was in Axis, so that time also the number of proposals were not that. So we prioritize proposals basis the doability of a proposal. Whether I know that a proposal, I am confident enough that this proposal will sail through, then only I'll put my time, effort and everything to get into it. But if there are 3 proposals, I prioritize the best one first and the remaining 2 will be deprioritized. And what we eventually will lead that the client will say that the things are not moving at all. Sorry. So client will see that the things are not moving at all. And that gives a frustration to the client, primarily because we are wasting a lot of time for them. And the credit requirements sometimes are very urgent and necessary, which needs to be brought into. So this is the second point which I felt is something which we miss most of the time. Third is in this growth relationship where we try to tie up with a client, transparency lacks. So if we introduce an investor with a client, investor matlab here being bank, PSUs, NBFC, if we introduce them and they directly interact and we are lost into that discussion. That means what happens, we are out of the discussion and we don't know what kind of discussion is going through. So that transparency level also doesn't comes into picture most typically when we see that. So these are some of the then limited lender options. So like when I was in ICICI, my lens was very small. I knew that ICICI parameters are such and such and I'll evaluate a proposal basis those parameters. When I went into Axis, Axis had some more deviation than what ICICI had. And when I was in Kotak, Kotak was very conservative bank. Primarily, they work more on the personal guarantees aspects and all. But when I came to UBI, I have seen that I am currently dealing with more than 50 to 60 lenders. And everybody has different kind of risk appetite. So you can't judge a client that it will not happen because of the risk. So that I'll come later on why I am telling this statement now. So that I'll come to them. Yeah, so I have covered manage different lenders for different requirement of a company. Next is what happens when we process a request. So when we go to a PSU has its own set of exhaustive list of documents which will be needed to go into a proposal. But when we come to some NBFC, suppose, NBFC is a very different requirement. And when we come to a private bank prioritize something else. So the set of documents may vary from bank to bank, but there are some set of 80% of the documents are most of the common documents which is asked by any kind of lenders. And remaining 20% varies according to the risk appetite of each of the bank, NBFCs and PSUs. So this is also something which needs to be jotted down. What are the requirements primarily? So this is one of the challenge. We don't collect documents at a time. What is needed to go ahead with. Most critical factor for any of the client with whom we deal is the interest rate. What is the interest rate which we are going to get? We may overpromise and underdeliver. And this happens most of the time. But ideally, we should deliver what we promise. So that is something which needs to be taken care. So how we solve this problem, I'll come later on this. And offline process hinder a seamless customer experience. When there is no one to interact with, they can directly interact, and that may not give a right picture of how the things are moving between lenders and client. And we might not be aware what exactly is happening in the deal. So that is something where offline conversations generally moves us out from the discussion, which is the most critical thing also in our role. And the last factor which I have noted down, that was something which was very close to me, was understanding the credit nuances. Primarily what happens when you assess a proposal, we might, like I worked with a bank in large corporate for 12 years, I know what kind of credit will sail through with which of the lenders. So that gives a lot of comfort if I interact with a client. If I interact, I can come to know whether I will be able to take this transaction with any of the bank and BFCs or PSU banks, MNC, any bank. But if I am not comfortable, I can understand the reason behind it. But most of the time, what happens, we don't have those kind of credit understanding to take up the discussion ahead. And that means we, again, I come that we overpromise that we'll be able to take up the transaction and close it. And eventually it doesn't happen. So that is also sometimes which we face as a challenge while taking it up. So now where I am associated currently, working for last 3 years, UB. So UB has done close to 1,50,000 crore of disbursement as on date, if I am speaking. So this number doesn't, it speaks the volume, 1,50,000 crore of disbursement I am talking about. And we have more than 25 credit offerings, and daily we are transacting close to 1 lakh transactions a day. As we are speaking in the night, also transactions are happening on the platform. This is the role what it plays. I'll come how it happens in the platform in the next of my slides. So as we speak, so every day we process close to 1 lakh transactions on the platform. So primarily, just to give a brief, our philosophy was to provide access to the capital to whoever is eligible for. So that purpose is being, I think we are effectively solving it from last 3 years when I am there here. So we started here in 2020, which I'll cover. So we started our journey in 2020 with loans platform and securitization. So securitization, primarily bank securitize the loan, asset-backed securitization, mortgage-backed securitization, and sell it to the SPVs to take it up. And we started with loans. Loans primarily is anything on balance sheet debt which is needed by any of the client. That is covered under loans. So then in 2020 itself, we launched our bond platform for issuance of bond. So it was an institutional bond which we started with. We haven't entered into retail segment. So we started with bond issuance in 2020. We have transacted $5 billion of transaction volume in 2020. And then in 2021, we have raised $90 million of equity, Series A. Equities was primarily raised by Sequoia, Insight Partners, Lightspeed. All these were the partners through which we raised equity close to $90 million in Series A. Our volume grew from $9 million to $12 billion, $5 billion to $12 billion. In 2022, we raised $137 million of equity. So close to $243 million of equity was raised by UB as on date. In parallel, we started our retail platform. We acquired 3 companies, Spocto, Finfort, and Corpository. And then currently we are present in 6 offices in India. Outside India also we are present in UAE, and more than 1,000 employees. Currently as we speak, it's around 1,200 employees in UB. So what I wanted to cover was primarily the piece which is more critical is loans, supply chain and bonds, which is I think it will be of the larger area of interest for everybody to work upon. So UB comes as a platform here, if we see, and what we do is we provide discovery, execution and fulfillment. If I go into deep, we are a platform. At the one side of the platform, we have all the clients who want to do a transaction. At the other side, we have all the lenders. So lender access is from bank, NBFCs, PSUs, MNCs, all the banks, whichever you think of are present on the platform currently, are there. So what we provide is discovery, execution and fulfillment. Everything happens on the platform. So whenever we see what is happening, we can go through where exactly the proposal is currently moving. Even the queries which are asked can be asked on the platform. And answers given by the client will also flow on the platform. So it will be a seamless flow, inter-operation flow between client and lender, which will happen on the platform. This is on the loans, supply chain and primarily bonds piece which we are talking about. So I'll go into deeper in this currently. So this is like two-sided marketplace where both parties interact with each other. So example is like Amazon, Zomato and Flipkart which I have given. They have their own separate Amazon business, and then there is Amazon.com which serves the retailers. So we have different segments which are interoperable. So if I speak, why we choose UV credit marketplace. The reason to choose it. First is get your choice of lenders. So what happens? I'll just give you a brief how it works primarily here. So suppose a client comes and wants to want to get a debt. They will come and list the platform that they want a working capital loan of 10 crores. For example, once they put the 10 crore requirement, certain rate of interest, they will have to just put it in the platform. Basis the numbers, the key numbers which will be punched in. Primarily, most of the numbers will be masked. Without the permission, lenders can't see those numbers if that is not available in the public domain. Only information which is available in the public domain will be visible to a investor to assess the profile. Basis those information as a lender. So, and we have an algorithm set for all of the banks, NBFCs and MNC. Basis those algorithm, only those lenders will be given those deals where the fitment criteria meets. Primarily, if a lender wants to work between 9 to 10% of interest rate, so only those lenders will get those details about the client. But suppose a lender which is an NBFC, which works at a 13% of interest rate, that deal will not flow if a client requirement is at 9%. Then those NBFC will not be able to know that the deal is on the platform. So the deal flows through them. Basic set of information is being provided. What are the current revenue numbers, EBITDA, PAT numbers, what is the requirement, what is the security. Basis that a lender will express interest on the platform. Once they express interest, bank, suppose a bank A express interest on the platform, like ICICI Bank suppose express interest on the platform, it will come to a client. Basis once it comes to a client will accept that interest on the platform. And once they accept that interest, then they can start working. So it gives so we have, everything is recorded on the platform. That lender has sent an expression of interest, client has accepted it, and the data flow will happen on the platform. So whatever data will be needed will flow on the platform. And once the investor accesses those data, they'll come on the query piece. So primarily multiple queries comes. You might be aware, everybody would be aware that query comes quite often, multiple times, and different set of queries comes. So all those queries can be addressed on the platform itself. And what happens, the beauty of this platform would be most of the queries, suppose if it comes to me as a UB partner, I know that the client has 1 to 10 things which is available with me, and the query has been pertaining to those 10 documents which has been submitted. Those will be answered by me. Suppose there is any query which is not available with me, only those queries will go to a client for them to answer, because that will save a lot of time for a client, because repetitive queries will come from each of the bank. Even if I was working with ICICI, Axis or Kotak, the set of queries mostly remains the same, 70%. 30% queries vary from each of the banks. So for those 30% of the queries, we tend to take all the queries at a glance, because I know what kind of queries can come in. So if there are something which is not there on the platform, which I have not anticipated and I don't have the answer, that will be given to a client to answer. So those queries will go to. So that will save a lot of time for the client to answer those queries, because we are managing the data at the back end. Most important point is we prepare the credit note ourselves for the bank. I have the format for every bank, NBFC and PSU. Their own format, we prepare the credit note and we send it across to them. Because as a banker, I know initially when I joined ICICI, at that point of time, what happened, once I get a proposal, I think I was thinking, let me waste some more time in that proposal, because I don't want to concentrate more on the work, rather because it will, if you start any proposal from scratch, you know that it will take a lot of time to prepare a credit note. But once the data is already filled in, punched in and given in a format which is needed by a bank, it makes the task easier for any of the formats. We have a system by which all the data automatically punch in the format which is required. So we are developing that, and it is currently in the developed state. So what will happen if you go on the platform, you'll come to know that the data are such structured that if we generate an output in the PDF or Word format, it will come in the format which is required by a different bank. So that solves a lot of purpose for any of the investor, because they get the data in the format which they want. And basis that evaluation, they will come to a conclusion that the TAT would reduce primarily, turnaround time. So eventually, on an average, TAT was 2.5 months, mostly 70 to 90 days, which has been reduced to 45 days. And few of the lenders, I am very surprised that few of the lenders are doing it 7 to 10 days also. So that is the kind of TAT which we are targeting now. So that it should eventually be something which should not take more than a fortnight to come to a conclusion for any of the large debt requirement. So here you will get your choice of lender, lowest interest rate. Any idea why we can get a lower interest rate? Anybody can say something on it, how as a platform we can get a lower interest rate than just dealing outside the platform?
It's a comparative study that you do, right?
Yeah.
It's the data again. You're working with the data, right?
Right.
If you do a comparative study,
Right.
you get the best rate out.
Right.
It's the stats.
So you are right. One is the stat that I know that this bank works in this kind of interest rate. This NBFC work in this kind of interest. Second factor is that client A comes to transact on the platform, then there will be not one bank which will express interest. There will be 4 or 5 banks or NBFCs which will express interest. And there will be a competition because of that.
That's more on a FIFO basis that you're talking about.
Yeah.
Close the deal, right?
Yeah.
If they want to close the deal, they go by first in, first out.
Ha.
Whichever is available so that we pull off the deal.
But
But it's not in the benefit of the client or the customer.
no, so but what our expertise comes into picture. Suppose you as a lender, if suppose you are delayed, for example, in assessing the proposal, but I know that you can give it at an interest rate of 9%. But suppose the other lender might be fast, but he's giving it at 12% of interest rate. So our expertise comes and we guide the client at that point of time. That see, might be there is a week delay from the other lender, but I know that lender will close at an interest rate of 9% from our past experience, basis those numbers.
But there is an external factor
Yeah.
which is called the need of the client.
Right.
Sometimes the client is in need
Yeah.
on an urgency to get the funds, so he will compromise on the rate of interest.
Then so if he's okay for that, we have no issues.
So that's where the TAT will come into picture.
That will come into picture. Yeah, so yeah, one point which you have correctly highlighted is when I start a transaction with any of the client, my question would be what kind of interest they are looking for. And if I say 9%, I can say at that point of time, if your TAT is 10 days, then don't anticipate 9%, I'll bring you at 11% because I know lenders which are working in a much faster TAT would come into 2 weeks time, but the interest rate will be higher. So that time he has to take a decision whether he wants to go ahead with that kind of lender or he wants to still give 1 or 2 more weeks of time and go ahead with a lender which will come at a competitive rate. Yeah.
See, generally when you do debt and asset restructuring,
Right.
we draw the framework.
Right.
We then decide how the client can be given money, through which channel can be given money.
Yeah.
That's where you analyze. So generally it takes 24 hours or 48 hours to analyze a financial capability of the client.
Absolutely. So this is what. So
But I'm not even getting into the
no, agreed. So now when I started in UB 3 years back, that time it was a manual evaluation, but now it's all system driven analysis. That is why we reduce the TAT and we know that the rate of interest which is the ask of a client will be satisfied by these 3 banks. And the deal will automatically flow to those banks. It's not that we are manually putting any deals. It's all automatically going to the bank. Bank is expressing interest, client is accepting it, data flow, everything is on the platform. No manual intervention here. But manual intervention comes in taking a judgment like the way you told, that if I want to close a deal in 2 weeks, but rate of interest might be higher. So that is a manual judgment which system will not take into consideration. Now, this is the most important aspect. What UB does is UB doesn't charge client until unless sanction is accepted or sanction is in the terms at which client wants. So it's all a success-based fee. But we also have one aspect into this picture, that success-based fee comes into picture when suppose a lender has brought an in-principle sanction at a condition which a client wants and client has accepted it. Everything is documented on the platform. So if he accepts an in-principle sanction on the platform, that means he is abiding to those in-principle sanction. And once a final sanction comes and client doesn't accept it, that means it has, so the client has wasted time of lender, us, as well as is not getting into those needs. So that time we apply a drop dead fee also. So once the sanction has come into a picture which is as per aligned in principle sanction, which was given by a lender, and you have not gone ahead with the final sanction, then the drop dead fee also comes into picture. So success-based fee is there, but at the terms, if the success is according to the terms which is agreed in the initial discussion. So I can highlight one of the discussion happened with one of the client when in my initial call I joined, and during that call he had given his security ask, his rate of interest ask, his timelines by which he wants to go ahead with. So everything has been recorded in the platform. Later on he was not okay to take it up. When the final sanction comes, it comes into picture because he might be getting something better outside. He would have got something good. but the effort has lost. So in that case, we do have all the documentation in place where we can ask him to pay a drop dead fee. It's not that it's a verbal communication, it's all documented. Being a larger platform, addressing more than, in fact, pan-India presence, we are present in UAE, so we dictate those terms initially itself, that you have to sign an agreement, you have to agree on the certain commercials, you have to agree on the aspect which needs to be complied with. And if something is not there, then definitely we'll have to go ahead with in that case. So typically fee primarily ranges at a typical on an average it is 1%, but it ranges to 2% also, 1.5%. Depends on the client primarily what are the risks in taking up the discussion in the client. So if a client is really good, it has a good balance sheet, collateral is good and all. So obviously rate would come down. If there is lack of collateral, there is security is not that great, then obviously rate would go higher in that case.
Say for example, a client has a CMR rating and a civil rating. CMR is above 9.
Right.
But his financials are way too good in the last 2 years.
Sorry, his financials are?
Way too good in the last 2 years.
Right. Right.
How do we balance that? Because CMR, 9 means you cannot loan.
Right. This is SBI ka CMR, right? Yeah. So what has happened? So CMR is the latest one you are saying. Current. So in that case, we'll not go ahead with SBI, but there are other lenders who doesn't take that into consideration. So I can give an example. So we have recently done a transaction where the promoter was having some criminal cases running on primarily. So in that case, what has happened? Most of the private bank has rejected that case. But when we went to SBI, since you have taken an SBI example, so when we went to SBI, the CMR rating was good in the system. So that's why the deal has flown. But there are other cases where SBI has not done the transaction because their rating, they are fixed in the criteria. But there are some banks which are not fixed on those criteria. They generally see the kind of business they are into and what are the current numbers. So they mostly ignore that. So there are deviations in the bank primarily. So they have to take to higher committee or they have to take a deviation to take the proposal ahead. So there are banks and BFC which take those transactions.
They look at the cash flow more.
Cash flow mostly, yeah. Means their debt should be secured enough. They should be able to service the debt basis the cash flow.
Suppose there will be a deviation from the in principle sanction and the final sanction. And if the client says, no, I don't want this, then your fees will be applicable?
No. So if in principle sanction he has accepted and the terms are not matching with the final sanction, obviously we have not met to the client's requirement. So then in that case we will not ask client to pay. No. If it is in line with the in principle sanction, obviously then it's our right to ask for our fee.
What is stopping a client going directly to the lender and undercutting you?
No, so that is what I told. So we have a very stringent documentation process. We generally don't entertain client unless all the documentation agreements are in place. In case, so what has happened, I'll also give an example here. So suppose a client is dealing with a bank A initially. Then system also has an algorithm, you can block those banks. You can put them on the negative list. Because I don't want to take, suppose as a client, I don't want to go ahead with SBI. Because SBI is my existing lender. So system will mask that lender initially itself. So those lenders will be negative in the system. So that lender will not be able to see the deal created on the platform because it has been marked negative in the system itself.
Anyways, the civil report will
reflect. So we anyway will mark. No. So what has happened? So client will say that I'm in parallel in discussion with Federal, for example. But it is not the current lender. Then in that case, Federal will also be masked.
But don't you think your productivity goes for a toss when there is a duplicacy of same banks? Say for example today, I'm giving the client an XD.
Right.
And now the client has a pre-sanction or an initiation sanction, right? And he goes into the market and tries for more. You cannot stop anyone.
No, we cannot stop. So
what is that? What we do here, which can stop him from going into the market? What's the confidence level that the client?
So we have an agreement initially where they have to note it down the negative lenders also. Suppose if they have told that these 6 banks are there with whom we should not approach, will not approach those banks. But if it is the 7th bank and he says that letter state that you don't approach that bank, that will not be acceptable. Because initial in the agreement which is signed by the promoter of the company and with UB mentions the name of the list of the banks which is in the negative list. So they cannot say on a later date, or in fact what happens sometimes, we bring a bank and they say that I know this guy. right? I have dealt with this fellow, with this RM, because universe is very small. So they might say this. But at that point of time also they cannot debate that cannot go through us. So I have not seen a case till now in 3 years where we have not been able to take it ahead, even though they know it. The reason being, we have more than 1,000 employees and we connect with each of the bank and BFCs every week. There is a separate team, Pan India, which meets with each of the bank heads every week and update on cases. We mail every week, there is a mail which goes to the ED, Executive Director, yeah, GM, whichever, every week with the status, what is actually happening in the transaction. So that gives, so primarily our approach is top-bottom approach rather than meeting or restricting ourselves at a RM level. So there are cases like, we have seen in cases like PSU banks where transactions run for ages. It may take 4 or 5 months also. But we have restricted ourselves because we don't entertain only RM level or AGM level where we are interacting with. We generally push it at BKC level or Mumbai level, wherever the head office is there. So what happened, obviously the proposal will have their reduced stat in that case. So we have done transaction last year for 350 crores, which was closed in 45 days of time from a PSU. 350 crore transaction generally, if it is there, it will take time. With NBFC, generally, typically we close in 15 days. Maximum timeline which we follow is 15 to 20 days, not more than that. There are transactions which we have closed in a week's time also. So it varies on the quantum which we are dealing with.
Also in PSU banks now, on the working capital, they look for the cash budget method. So in that case, because generally we give the CMA data.
Right.
But now if you see PSU banks are insisting for the cash budget. So that, how you help in that case?
No, so what we generally initially we take, suppose if something is answer to your question, if something is not fitting in the criteria what PSU is asking for, we have all the lenders because we have format for every bank and BFC. Suppose if a lender criteria is not fulfilled, we will not waste time in that. In case, because we come to know that if they are asking for, in fact, if they are asking for additional data, we have all the CS sitting in our office who can prepare immediately and give it in half an hour. If we have the available data available, information available with us. So if there is any requisite format which they want to put into those details, we'll be able to make it in that format. That will not be a challenge.
Even after agreement, if the client doesn't pay the fees, then do valuation thing. Because valuation is very subjective.
Right.
Once the proposal starts, client asks for valuation, say 20-25% higher only.
Right. Right.
Once banker does, it is 10% lesser than
No, so there are different ways. So every bank has their empaneled valuer, right? So we are mostly connected with most of the valuer, if you see in the market. And we generally have an idea of what kind of valuation you will get on those properties. Suppose we speak with them and we have to make them give a realistic expectation to them. We may get an upside. We have got in many cases also, but it will not be a drastic exponential upside in the valuation. So maximum 10% upside will be there. So obviously you'll have to deal with it. You can't change it to exponential numbers. So that is the. Yeah.
How do you guys manage the internal credit rating of that bank? Like every bank has an internal rating system,
Right.
For every client.
Right.
How do you guys manage that?
No, so internal rating system doesn't come of their own. So I was a banker for 14 years, right? So what happens? They prepare a note. Basis the numbers, they punch in the data, and then the score parameters come. So like ICCI doesn't have a scoring parameter. It is completely based on the risk appetite, how much they take. But few banks like SBI, CMR 9 is the rating, suppose it comes. It comes based on the numbers which you punch in. So we come to know that if the rating is between CMR 8 to 1, will be the good rating. 9, 10, mightly most of the time proposal gets dropped in SBI. So in that case, we understand which bank has a larger risk appetite where it can flow through. So we don't take, for example, I know that Kotak Bank will not work without personal guarantee. I will not waste my time with Kotak Bank where there is no PG.
I have a small question.
Yeah.
Since you mentioned that you have an office in UAE,
Yeah.
are we also into FDIs?
Sorry?
Are we also doing FDIs?
No. We are not into FDI. No. But we are also arranging fund from outside India. So we have an offshore team which typically handles all the big DFIs. So primarily to the likes of, there are multiple overseas big investors which are there, which wants to invest. So like we are running a transaction currently. On the green energy side, they have a larger appetite. They want to invest in India on the green energy segment. So in that case, what happens? We have Connect. Our team are there which goes to UK, UAE and other stuff, where they have those market, but it takes a lot of time. If you go with a DFI, typically transaction size runs from 3.5 to 6 months, not less than that. But the ticket will be higher, rate of interest will be much cheaper. So, yeah.
But this foreign funding and now many people are doing from the gift city. So it is like that or?
Yeah. No, it's not like that. So gift city is so mostly what in gift city you say, it's mostly like a bias credit transaction which happens from the gift city. But these are overseas, not as an FDI, but overseas investment in those companies because they fulfill certain criteria, like they are into green energy, manufacturing EV batteries, EV cells, or something on the agri domain, which are like priority sector lending for banks. So these are the spaces where they are keen to invest in India.
More of hedge funding.
More of hedge funding, yeah. So these are the segments. Typically, we address to all the segments we see here. Sorry, I think, yeah. And the last point which I missed was single point of contact for multiple banks. So what happens here, that if my team works on a transaction, that one person will interact with each of the banks. So we have a team which manages banks. So that is a big team. So they will interact with each of the banks. So suppose I am a person, I will only manage ICICI Bank. So my duty is to meet ICICI at every level pan-India. That is my responsibility. But there is a separate team which runs with a client, which manages the client relationship. So their requirement would be to prepare a credit note, to understand all the queries which can come from a bank, to prepare those in advance so that the TAT can be reduced. So there are two teams. One is, and the third team is a team which supports in terms of getting a new client onboarded on the platform. Industry and rating coverage, we typically have done a lot of transactions in startup space also, which are EBITDA PAT negative companies. Cash flows visibility seems little low, and we have also done clients which are AA and AAA rated. So risk appetite is from company which is EBITDA and PAT negative to a company which is profitable with a good cash flow coming in. So it doesn't restrict. So we have closed a lot of transactions in startup space, by the way.
A lot of solar projects?
Yeah, we have done solar projects also.
So, but is your solar project restricted to a PPA from the government or?
No, it's outside also. Yeah. So, how UB credit market works, I have explained in my earlier discussion that client has to register, complete their profile, create a deal on the platform. Once they create a deal, they'll receive interest from the bank because algorithm is set in such a way that it automatically goes to the banks. Once they express interest, they will accept it, and then after acceptance, only the data will be visible to the bank. Before that, no data except the publicly available information is visible. Because most of the client doesn't want to reveal data, they doesn't want to deal with. Because NDAs, their non-disclosure agreements are, they doesn't want to reveal their data to every bank who is coming in the picture. Suppose there are 10 banks who have expressed interest, but they only want to work with the 2 of the banks. Only those banks whose expression of interest is accepted will be able to see the data points, not everybody. Then there comes a negotiate and accept term sheet. So term sheet will come on the platform itself. They can raise a question on any of the covenants or any of the security features or rate of interest, and they can work upon it. Get a final sanction and then disbursement. Disbursement is not online. That is bank and client can deal directly. Till final sanction, it is integrated with us.
We have a very different set of term sheet.
Right.
And there is a lot of negotiation required.
Right.
So
So we definitely play a role. What happens when a term sheet comes on the system, we summarize the term sheet and we mention that suppose a bank has given it 11%, for example, but I know that this bank can work at 9.5 or 10%. So once we summarize, where we don't loop in bank in that email, we send it to the client that interest rate is mentioned so and so, but my understanding suggests we can go down as below as 9.5% with this lender. Suppose collateral is there, which we see that they are asking more, where we can discuss. Personal guarantee is there, corporate guarantee is there. So we tweak the term sheet basis we feel that this lender can accept, and then send it across. And they can then revert on the platform that these are my ask primarily, where they can negotiate better. Because what happens, a client doesn't know how much they can reduce in terms of rate of interest, how much they can go down in collateral, whether corporate guarantee can be waived off or not. So all these aspects we know it much better. So we guide those clients in that matter. So our sole criteria is that we charge client, so we should not give him something which he will not accept. So because we don't charge lenders, right? We charge clients. So our first and the foremost duty is to make them aware that what kind of terms it can be taken ahead.
So on a net, most of the large corporates, they have their own team.
Right.
And they also negotiate very hard with it.
Absolutely.
And considering their current rate of interest and your charges, what is the net difference they would have availing your services?
So I'll tell. So when what has happened, there are clients uh, who is interacting with us from last 3 years. Last 3 years, one client I'm saying. So I am working not one client, but multiple client who is interacting with me for last 3 years. They would have done it themselves, right? Once we have done a transaction for remaining rates, they would have gone ahead without paying us, right? Nobody is forcing them to do it. But still, clients are doing through us. And I can give, we have data that around 55% of the clients are repeat clients of us.
What's the minimum turnkey that you're looking for a client who you arrange funds for?
Minimum quantum of debt? Yeah, so it will be as low as 5 to 10 crores also. And
So is it more of an account management that you do, or is it like a particular product that you're selling?
no, so we are more on the both side, you can say it. So it's a mix of both, account management as well as product.
Because one client can have multiple requirements.
So the next slide I'll come where we'll see what are the requirements which we can look into. This is there in the slide. So yeah, to answer your query. So what happened? When they will calculate their XIRR, right, including our fee and whatever they are charging. But at the end, they also see the value addition, because suppose if we are able to bring something where we have reduced the rate from the current bank, and most of the time we have done it. We have reduced the rate of interest. Our cost is a one-time cost, but the recurring cost would be something rate of interest which they will be paying eventually till the facility is live with these guys. On the working capital side, it's a revolving line. So obviously it will save them. So if it's a 90-day working capital cycle, so obviously they are saving the money on those, right? And third important parameter is most of the I can say heavy lifting is being done by us. So primarily, they doesn't have to bother, and they have to rest assured that we'll be able to bring term sheet for them, if we have agreed that we are going ahead with the transaction. So first important point is we do the checks, and if we feel that the transaction is doable from our end, then only we proceed in it, rather than not taking up every and any transactions. So that way, what happens? Their bandwidth are not choked in running a transaction. Rather than they will look. And one important point is which he has highlighted was that other products. So it's not only about loans which we are servicing. We can manage the complete 360-degree cycle of a debt which required. So we not only present on the loans, we also do bonds, right? We are also present on the supply chain financing. And in supply chain financing, there are few investors which has only strategic partnership through us. They doesn't deal with outside growth partners. They only deal through us. And that is unsecured purchase line, where we don't ask for security also.
For example, I'm saying like we handle around 180 products.
Right.
Starting from a bill discounting to all entire SME products.
Yeah.
Export funding, import funding, post-shipment,
Yeah.
everything. So that's an in-house, right? A person who's coming to us with a 200 crore turnover or 400
Right.
crore turnover, he's not, obviously he's going to expand more, right?
Yeah.
So is that also in the platform where we give them multiple facilities rather than just giving one policy?
Yeah, it's there in the platform.
What's the success rate, like out of let's say 10 people apply, how much you accept it and how much you take not?
No, so there are, once it's initial filter, and that filtration generally works because we have integrated CIBIL and all. So once you put the details, obviously CIBIL will be pulled out initially itself. So we have acquired a company called Corpository. Corpository takes out all the details of the client.
That's more like an ROC.
More like an ROC, or more like you can say there are other platforms also, but it works really well. So once the data is there, Corpository pulls out everything about the company, promoters and everything. So one check is there. Second is, out of 10 clients which are onboarded, we are able to close almost 8 of the clients. So if I say, I would say roughly around 75 to 80% success rate in terms of onboarding. There are clients.
There is a restriction because Corpository will only take or fetch privately limited companies.
No.
Or partnership companies.
No.
That is generally not there.
So generally, whoever files on MCA, it will be there. So it basically pulls data from there, right?
When you say bonds, so how do you get your bonds placed? Through a broker or directly?
No, so there we have Family Office Connect. We have a large pool team of securities. So where we have HNIs associated with us. We have a platform called Aspero also. Yeah, you can type in website where retail investor can also invest on the bonds, like us who want to participate.
But are they brokers?
No. So there are three aspects. I'll come in the next slide. I'll tell you which all participants are there. So there are retail and institutions. Institutions are primarily B2B, where I sell to a institution. We have connect with family offices. Pan India family offices are there. There is a separate team who meets and sells those bonds to those guys. And we have a platform called Aspero where retail bonds are sold, where individuals like us can buy, who is not a family office or HNI, but somebody who wants to invest 10,000 rupees can also invest on the platform, on the bond.
So until now, you have never looked on the opportunity of using a broker or anything to get your bonds placed. Like, it's always successful getting all the bonds placed.
So in bonds, we also warehouse in our own books also. So unlike loans where we don't keep anything on our books, in bonds we take risk on our books also. Suppose if I like a lender, I'll subscribe it, and suppose we have issued 50 crore to them, 50 crore will be on our platform, in our books, and we downsell it to family offices in next 1 or 2 months. So that will free that space and then we'll bring in another client. We underwrite also.
Is a-
Specific industry?
No.
is a hard underwriting or soft underwriting?
Soft underwriting. So clientele, I told, from startup to listed companies are all there with whom we interact with. So this slide I was going to come. This is Spocto. Spocto is our collection. We acquired this company in 22. So this is a company which uses AI-driven model for collections. So primarily any kind of collections for clients, for banks. So Spocto plays a major role for us, where they have AI, artificial intelligence, text, calls, all these data centers kind of work is carried on through Spocto. Then we have co-lending. Co-lending where bank and BFCs come together and participate in kind of on any consumer loan, vehicle loan, or yeah. This is another platform. So there is a separate team for managing co-lending. Then comes UB pools. Pools primarily securitize, so asset-based securitizing, mortgage-based securitizing. So we securitize those and sell it to SPVs. Aspero, which I was talking about, is one where fixed income investments are done by retailers. And that is spanning out really well for us currently.
So what is the minimum ticket size for the retail investor?
We can go as low as 1,000, 2,000 rupees also. So.
Any specifics on the rating, like any particular rated bonds or any?
So if you go, you will find the listed bonds, pricing, coupon rate at which they are being sold. If you want to you have to buy. Number of stocks you want to buy, and then you subscribe, and then period for which you want to take it up. So period is mentioned there, that 3 month yield will be this much, 1 year yield will be this much. So all these are listed.
So the clearing and everything is done on the portal itself?
In the portal itself.
So we have to open the demat for that?
No. Direct. You have to do your KYC. You have to enter your PAN and other details.
It's a separate NBFC?
So it is SEBI registered as per, registered at SEBI. Yeah. No, it's not an NBFC. So we are not taking the fund. So we are a platform, right? So if you are subscribing, that fund goes to that, suppose, client whose coupon whose papers you are subscribing to, they will get those yield. More like a channel, yeah.
What will be the coupon?
Typically, good clients also start from 8 to 9%. 13-14% also we have listing. Yes, sir.
So it is listed or unlisted?
Both. Then we have corpository, which I was just speaking. It's like it will give all the information of any set of clients which is present on the platform.
Is there any person who wants to independently evaluate their services?
Sorry?
Somebody wants to utilize your services or property?
Yeah, they can do it.
They can do it.
So we have also given to banks. So a few banks have taken corpository services from us.
Like taking out the data.
Yeah. So that huge, and it's very, to be true, the clients which generally banks or fintechs want to use it, so they have found it really good, this corpository, to access those data. This co-lending which I was saying, SBI is our partner, biggest partner in co-lending. So, sorry?
There was some recent
Recent news. So that is why I say that as we speak, also transactions are going on co-lending on the platform. So pan-India collaboration with Muthoot, SBI, and there are multiple partners who have collaborated on the co-lending space through us.
Is there any ratio on gross NPA, net NPA on co-lending platform?
No. That I don't think. I'll have to check on whether that is listed on the NPA side, because primarily both partners will associate and fund, right, in the co-lending. Be it bank and NBFCs comes together and work on the funding. No. We are only platform. Bank and so there are tripartite, bank, NBFC will come together and fund. So as per RBI guideline, NBFC has to contribute 20% at least in the total loan size for a co-lending space to work upon. So they come together to fund like if I can say example like consumer loan. So the consumer loan will be a small ticket size loans. So all these small ticket size loans will be serviced on the co-lending platform, because total, suppose we have bank and one NBFC has come together, they have granted a 10 crore of loan with some certain FLDG, which will be captured in the escrow agreement. Certain FLDG is given on those transactions. So both will come together and fund a client. Retailers which are there, and then funding will happen. And money once it's collected will come into escrow. And this is UB loans, primarily UB, which I say. I am part of that department here in UB, which manage anything on balance sheet, be it on the working capital, term loan, capex, acquisition financing, so anything under the universe.
How do you work out the interest part when it's a co-lending where two different partners are coming in? Because an NBFC, as per the RBI rule, have a stringent interest rate.
Right.
Because the money that they take in
Right.
is on a higher scale.
Yeah, obviously.
But a PSU will have it on a
Lesser rate. So what happens, there is an escrow arrangement. So generally three parties will come together to decide on a mutual interest rate which will come into picture. So this is the discussion which generally happens when two partners come together. And the question is right. So what happens, NBFC charges are higher and bank charges might be lower, but they have to come into a consensus that this is the rate of borrowing which will happen for a particular client. That is why escrow comes into picture here. Obviously rate would go up if NBFC comes and participate in any lending. Yeah, so now this growth partner program which we are running currently has been very successful for us, primarily with UB. Reason being, there are multiple things. So Tanmay represents our marketing team here. So he primarily manages this aspect. What happens, we have a team of 1,000 people who are working here, and at given point of time, we are running for any geography. So I am heading south currently. So at south, we have more than 50 transactions running currently with a set of clients. For any of growth partner, at a time, 50 clients can't be serviced. And in that case, what happens if we collaborate together? What would happen? There would be collaboration where UB would work together to facilitate the debt requirement of the client. Most of the heavy lifting will be done by UB with the support from the growth partners here. On successful closure, a growth partner would get a certain percentage of fee, which you can negotiate with the team. And if that is agreed, you don't have to take care of the transactions per se. Transaction will be run by us. Once it is closed automatically, anyway you can see on the platform also, but once it is closed, automatically whatever has been agreed between both the parties will be divided on the fee once it is committed. So most of the what has happened in South, which I have seen, that we get a lot of leads on this aspect. Why? Because there are growth partners who wants to concentrate on few of the deals, but most of the deals they want us to run, because they doesn't have those bandwidth to run transactions and go and meet the banks on a regular basis. Because my team travels almost 3 days in a week. They go to Mumbai, they go to Delhi, and I come to Mumbai almost every week. So we have that kind of bandwidth to go and meet with the banker when whenever and wherever it is required to close the transaction. Might be as a growth partner, you don't have that time because you are servicing multiple clients or you don't have that bandwidth to work upon. If you have given a lead and you have introduced us with that client, one meeting has to be done. After that, even if you are not involved and we are closing the transaction, on a certain agreed fee, whatever is there will be passed upon.
Client would know that the amount or
Which amount, matlab, agreed between us? No, no, no. That is between, even in fact, I also don't know what is the agreed fee. So,
confidential information between the partner and the UB. So client will only know what kind of fee UB is charging to the company. They will never know what kind of sharing is happening between the partner and UB.
and we'll share the engagement letter. So our engagement letter captures what is the fee which we are charging.
So you will have an idea like what kind of fee we are charging to a client and whatever percentage we have agreed with you, that will be given you when there is a successful receipt of the payment to the client.
Right. And this model has really worked in South and West also, in fact, I think, where we have worked with many partners where they give us the leads, they introduce in the first meeting, and after that, even if they are not involved, if the transaction closes, the agreed fee is passed upon.
what's the tag for that?
For transfer, immediate. Once we get the fee, we'll transfer it. I don't know, Tanmay can comment.
What's the tag for you between you and between you like
So once we get a fee from the borrower, now we can decide whether we want to work on a 7-day cycle or 14-day cycle, and we can write that in the agreement and we will adhere to that payment timeline.
Once you accept this final sanction letter.
No. So once we receive the fees from the borrower, because we will also have to recover that fee that
We generally recover our fee on time.
disbursement or subject to sanction?
now subject to sanction. So our fees is applicable when we get you a right sanction as per the requirement mentioned in the initial stage. That is where the client has to pay us. Right? In most of the cases, what it happens on the first tranche, they give us the fee. Whenever we receive the fee, the percentage which has been agreed will be given to you in a 7-day timeline or a 14-day timeline. So that's how.
Yeah, right. So,
Yes, after the disbursement and when we get the fee from the client.
no, so it depends. So it might be post-sanction. So as per agreed terms in initially, which you will come to know whenever you introduce a client, whatever we have agreed. If we have agreed post-sanction, means post-sanction. If he has accepted the sanction, he has to pay the fee. Documentation, if some client insists, I want to pay after documentation, that is captured in the agreement itself. So that you will come to know. If there is sanction, post-sanction, we ask for our fee, if he has accepted. If it is post-documentation, or post disbursement, there are most of the time we ask post documentation, we don't wait for disbursement. Post documentation, generally they pay our fee. Yeah. So what is the benefit? Primarily access to almost all the lenders which we are working upon. So rest assured that if the deal is there, 10 out of 8 deals will be closed if you have given to us. Even if the client is inferior, we'll ensure that the deal is closed because that is our bread and butter. So obviously we have most of the lenders with us who can take. So when I was a bank, my mindset was very narrow that we can't do a transaction. When I was ICICI, when I came to UB, so initially I was rejecting this transaction can't be done. This is not a doable one. But eventually in 3 months I understood none of the transactions are not doable. Most of the transactions are doable. There are lenders who can address to those requirements.
So what's the minimum benchmark on the civil rating and what's the minimum benchmark on the...
No, as such, as you initially told, there are sometimes people take call on cash flows. Maybe CIBIL is not good and we have proper explanation for that less CIBIL scores.
So if the person is NPA during the COVID time, but the cash flow is good right now for the last 2 years.
No, so if a client is NPA, then things become very difficult. Then our fee would not be 1% in that case. And if I see merit,
That's where the catch is, because the fees will come higher when it's NPA.
obviously. So if a client is NPA and I feel merit to take it up, and I feel that so there are clients we have closed last year, the client got NPA 3 years back, and now they have revived the cycle. We were able to fund, but the fee was higher, more than 3% we have charged to that client.
It's more like an asset restructuring.
Yes.
So banks only?
NBFCs we have done.
Mostly NPAs.
Bank will generally don't touch an NPA transaction. So discovery of most suitable lender anyway with tech-driven AI. So we'll get that.
You deal with the ARCs also?
No, we don't deal with ARC. On securitization, we generally sometime, but not on the loans piece. Our coverage is pan-India. Our platform serving all level of corporate, AAA, unrated, PAT negative, all kind of companies. We have dedicated team. So we have expertise. So we have CH, mostly CH in our team, and mostly ex-bankers who have worked on the credit side, so that they should have understanding how a transaction runs through. Pricing would be the most important and critical part for us, because that is something which is any lender wants to look into. Last point, revenue sharing on every successful disbursement, we do it. So how to become it, like discussion on partnership. So Tanmay can play a role there. We can formulate an agreement and close it out between growth partner and us. Once on signing the agreement, you have to share the case, and we'll have one round of meeting, and the basis meeting will take it up, and then that takes it up. Transaction flow I have anyway explained. So yeah.
So I'll explain this slide.
Yeah.
So basically, once we have signed the agreement with the partner side, then we start getting the cases from you. Now, once we get a case, like Chandra sir was mentioning in the initial, that we do a very exhaustive level of due diligence, because we are not looking to do every case. We are looking to touch only those cases where we believe these transactions can be done, right? So within a day or two, you can understand, we will get back to you, like out of the transaction that you have shared, this much of transaction we can facilitate through the platform, right? Now the second ask would be, once we have approved, like say if you have shared 10 cases and we say we can work on 8 cases, now you will have to set up a meeting with the client, because it's your client initially and you will have a good networking with them, right? So we try to get somebody as a influential person from the company side, like say maybe a CFO, the promoter of the MD from the client side, who has a very broad level of understanding about the company's operation and the kind of discussion that is going to happen. Post that, we will try to create a possible structure for the debt requirement, and we will let the client know about it, and if the client is comfortable, we will sign the engagement letter and the fee letter. Now fee letter will have the success fee mentioned in that, which will be applicable when there is a proper sanction as per the terms agreed initially, right? Then the CSG team, which is headed by Chandra sir for the South region of UP. So we have like different teams. In North, there would be a different leader who is looking at the North region. So for South region, Mr. Chandra is looking after. So my duty would be, whatever case comes, I'll figure out which geography it is, and I'll redirect to the right team of UP. So they will work on the cases, and we will be onboarding the client. So onboarding is nothing. We will just need a CIN, GST number, and a current borrowing profile of a company. It's just a 10-minute job. And once the onboarding is done, and one very important point is if a company wants to hide its profile from few lenders, that option is also available. So like say if they have, say currently they are dealing with 2 banks, and they do not want to make them know that they are looking for some debt requirement on some other platform. So there is an option where you can hide your debt requirement from selected lenders also. Then the servicing team would be working on the transaction. We'll be doing a full transparency. You can also be a member on the platform for that company just to see where exactly is the transaction. I'll also create a email thread and a proper WhatsApp group where you can get an update from the different people on the transaction that you have given. So one very important point is that now in this entire journey, we will be needing not just a support in getting the cases and setting up an introduction meeting, but also working as an extended team, if there's a delay from the client side in sharing the data points. So that is where we'll also be needing your support, where you can follow with the clients and get the data on time, because if their requirement is urgent, the delay will hamper the timeline completely, right? And also the fee letter, so which is very important, because that fee letter will have to be signed at the initial. So that is also where we will be needing your support in making the company accept that fee letter and sign it and give it to us.
So that will bring a legal recourse, right? If we get it documented upfront, because generally what happens at the end, they might backtrack to the words. That has to be documented properly, so that in case if we have to go to a legal recourse, we'll go ahead.
Yeah. And lastly, Uti, whenever there is a sanction that comes in, obviously the client will have to pay to us. That is also we'll be needing your support to get us a timely payment, because your share will also depend on when we get the payment from the client. So yeah.
No, just to give you information on the last point primarily. So initially when I started, there was AR, we call it account receivable, which used to pile up. But now our AR has drastically reduced. So all the sanctions which happen, generally we tend to collect in next 2 weeks. So we don't have the piling AR in our system now. So we have learned from our own mistakes. So that has helped us to ensure that the payments are not stuck. Yeah, so average success fee is 1.5%, which we have signed it up with any growth partner. Total pipeline would be close to 4,000 crores, which we have run. And highest single transaction was 550 crores through a growth partner. Otherwise, we have done close to 1,000 crore also. Last year, we have closed a 1,000 crore transaction. So, yeah.
So yeah, this is the very initial stage. I mean, we are just 6 months into this program when we started. So
Yeah.
we are growing exponentially. I mean, few our existing partners are also here. So this is just the beginning. We are very much confident that this year we will be closing at least the triple of this,
Right.
what we have done for the last financial year.
The single transaction that we talked about, is it a project funding or what?
Project funding. Generally, this typical size comes only on project funding. Yeah. No. That was primarily one industry was getting set up. So for that, we have done it. Greenfield plant. Yeah.
When you float a transaction to bankers, do they get the name of the client?
So yeah, one good question which you have asked. So initially what has happened, we have seen that we have listed, suppose a client, then there are few people who directly sees the name and then go ahead with. So now we have started doing masking the name of the client. We'll only give the key numbers. So names will not be visible to them initially. Which client is this? They will not be able to know.
Only after mandate.
Yeah.
When you mentioned about structures, are these structures pure lending kind of structures or convertibles and those kind of structures are also there?
No, apart from lending also we work on other structures. We have in fact done acquisition financing for one of the pharma company, close to 250 crores acquisition financing. In fact, we have also done on a barren land, they were constructing a building. So some of bank doesn't take those huge cases where you are funding a land, right? Land funding is mostly not done by a bank. So yeah.
Unless it's an agri.
Unless it's agri, so yeah.
Do construction finance also?
Yeah. Construction is a big play for us.
Paperwork and everything is done by your team.
Which paperwork?
Like project details.
So no, they will provide those project details. In fact, in case if a bank wants a CM in certain format, we help them in that. But if suppose we need a DPR report or anything, that obviously client has to give me those. But if there are any tweak in the numbers which has to be done, we'll do it. That's not a problem.
So you prepare all the projections for the
Yeah, we can do that. Generally, we take a guideline, and if there are numbers are incorrect, bank generally says we will correct those numbers, projections and all. Because without guidelines on how they are assuming the industry will grow, obviously that will be difficult to project somebody's financials.
Have you done infra project funding?
Yeah, we have done. Yeah, PP model.
Since multiple bankers are reviewing client details and all, how do they ensure that the CIBIL scores are not impacted?
So what we do, we have an inbuilt CIBIL score in our system. So once a client put in the data, CIBIL is automatically generated once. So they will not have to check the CIBIL again and again. So they have to use that CIBIL whenever they are assessing the details.
So how do you ensure that they are not generating CIBIL again?
No, so for
Once they log in the file, CIBIL automatically gets generated.
no, nothing. That's not. So at that time, if you are sure, so CIBIL is generally they have to take a consent from the borrower before doing it, right?
PSU doesn't take any consent.
So most of the time मेरे में भी message आया कि they have checked the CIBIL score. So yeah, but we generally generate CIBIL in our score. Obviously, we should not hit multiple times. So yeah, that check needs to be seen.
So they take the commercial CIBIL again, personal CIBIL.
Personal CIBIL, commercial CIBIL, all those are taken out.
So there is again and again, if he is applying for 3-4 bankers, then CIBIL score automatically
No, so most of the private bank doesn't do it. This issue is primarily with PSU, which you have highlighted. Private bank, we generally provide those CIBIL scores. So once they are through that proposal that they want to take, and there is a sufficient significant gap when the CIBIL is generated and the system has gone and logged in the proposal, then only those CIBIL will be taken it again. Otherwise, if they are into, private bank doesn't take it. PSU may sometime rightly mention that they, in spite of telling, they go ahead and do that.
That affects the credit rating.
Yeah, that affects it.
And I think, do you use anything in competition to CIBIL, or we also still rely on CIBIL only?
No. We have 3 checks in our system. I'm forgetting the other 2 names. ACRA, yeah. ACRA is there. So, yeah. So, generally, what individual CIBIL may they take 2. They don't rely on only CIBIL. So, either they took 2 scores, CIBIL and ACRA will together, and whichever will be.
It's a little expensive.
Yeah.
So people go by the.
Right.
What about future transaction with the client?
So we also have a term where we charge on the renewal every year. If there is enhancement, the same fee will be levied.
And what about the other requirement that client has?
We also work on the complete ecosystem. So if once they come on the platform, we go and meet them and we try to understand what all things can be worked upon with them. Like they might not be aware that we can work on an unsecured limit, unsecured purchase line. So we know that some banks are giving unsecured line where we don't have to give any security to them. There are some products which are off-balance sheet product, which are primarily like import financing lines where we do it with certain lenders which are off-balance sheet. They might not be aware about those products also. So we generally pitch all the things which can be possible for a client to take into consideration.
After 6 months, suppose client has some other requirement, he is coming up with some new variants. So that payment will be shared again after 6 months?
Yeah. So if something new is coming, obviously that agreement is into place, right, Tanma?
Yeah. We will discuss that.
And after, say, 2 years, somebody else comes with the same client to you.
See, the thing is ki,
No, so once a client is onboarded, it can't be onboarded again. See, I told you, right, I have a client which we are working for last 3 years. So obviously there are clients which are onboarded on the platform. Obviously that client is with us, right? We have met, if we have closed a transaction, so obviously we have the complete details.
No, so you have a particular transaction, but this mandate is for particular timeline, like 60 days or...
1 year ka generally.
After 1 year, say, she comes to you, with the same client.
Same client will not come, na? Because client will know that they are working with us already. So if you go to a client, you will say that I am going to onboard, and if you say that you are going to UB, so obviously they will say that we are already working with UB.
Even if say, he says, no, I don't want to go with me, he
Huh.
wants to go with some other
Huh.
person, then what about
Huh.
outbound?
Sorry, what?
So suppose
Huh.
you go to your client,
Huh.
after 1 year,
Hmm.
the client says to me immediately, I want to go with this company,
Huh.
even if it is UB.
Huh. So that's okay. After 1 year, if they don't want to go with UB, you are saying.
No. What he is saying, suppose if he has introduced some client,
Okay.
one transaction is done,
Huh.
1 year,
Huh.
and the client and the person has some dispute,
Huh.
then suppose me
Huh.
introduce the same client to you,
Huh.
then what to do, right?
Correct.
So this well has to be captured in the agreement initially. In case if you have agreed, ki if this client comes with anybody, I need my fee. Huh.
Subject to renewal of your agreement with the.
yeah.
Yeah.
So basically, we have an agreement timeline of 1 year, so that automatically renews.
After renewal.
And
Huh.
once a client comes through a specific partner, it is being tagged in the CRM for the same partner. So if the same company is coming through the another route, you'll just tell them that boss, this company is for.
Will not entertain
sharing is
first
not
of all.
possible.
If there is a company onboarded by any of guy, we will not entertain with others. For sure, we will not do it. In case that can be captured in the agreement initially itself also.
Because that is also where we will be, protecting the existing partner. If he's doing the hard work to get a good client to us, and then we are giving the benefit to some other partner side, so that's not right. So
Absolutely.
that all things are captured in the agreement. So yeah.
So in fact, historically, there's been one case, not with your platform, but some other platform that runs the partner program. It was a project finance, another company, so it's a different entity, right? A legal entity.
Oh.
So your CRM will not capture that.
We will not
End of
capture.
the day, by experience, I'm not sure how would you solve this problem for the partners, but by experience, what I realize is, end of the day, it's our relationship as advisors with the client. If there for any reason, if your relationship is weakened, I mean, that simply shows that it's not a valuable client for us anymore as an advisor. So for another group entity, if they've logged in, maybe, I don't know how do you control that again, like I'm saying, if there is another legal entity that they form, and then they go, which is to another advisor, then I'm not sure how do you capture
No,
that.
that's something which you have correctly highlighted. So one is the control, right? So we need lot many times we need support of the growth partner, because the connect you have, we
There is a way out.
ha,
They have a system called corporatizatory, right?
group company,
So the moment you come into an agreement with the company,
you can list those names also. Ha,
what all are the other entities aligned to the company? Because it's all there.
right.
So when the agreement is made, if as a partner, if you are sharp enough, you'll make sure that all those entities are already a part of that agreement that you.
Yeah, absolutely right.
So then you add that, like
This entity and so entity.
Entities are aligned with the agreement, so none of the entities can cross.
Yeah.
Yeah, I think somebody else was asking the question.
No, so in this also, company in Mumbai which I am handling, it has 9 subsidiaries, wholly owned subsidiaries. So yeah, he has correctly mentioned that if we capture in the agreement, so what has happened in the fee, I'll tell. So we have, so there is a disputed case in Bangalore where there is 2 companies. In the fee letter, we have only captured the one company. But somehow when we started transacting, we worked on both the companies. And that guy denied our payment. Part payment he has made, part he has not done it. But my legal recourse will not come into picture because we have not captured the second company in our agreement. So definitely that is something which is really important point.
But in infra, whenever it is always they float a separate entity due to a condition of the concession.
Yes.
They have to float a
SPVs, yeah.
project funding is a different. So even though, as you mentioned,
No, SPV will be part of,
you can't define that.
People challenging that also.
no, even if it is SPV, suppose I am working on a transaction for you and you have brought in that client and they have floated an SPV. So obviously that is part of your transaction only.
That SPV has a JV
JV,
with some other company.
Huh.
Then how it will be matter? If the JV is there is a two.
No,
company.
if the transaction is happening, you have brought that client and we are working for that purpose.
Suppose there is a two clients. One I have introduced.
Yeah.
Another he has introduced.
Huh.
Now that two company has done the JV
Huh.
and got the project.
Huh.
In that case, what will be?
It will be on the promoter or how it is? Because promoter will.
No, so now what has happened ki definitely call should be on JV agar hai and new company has come and if they are both on the platform.
Then UB will do.
No. So obviously one aspect can come into picture which is taking a funding, right? Obviously the company which is
We will take the price.
SPV will take, but who is controlling that SPV?
Both 50-50. Suppose if it is a
JV is of 50-50, then we don't have any control on it.
Ha, then tab to.
There also,
But we will not deny that we will have to come to a conclusion, but how, that's something.
I think that's a very exception case. If two partners have given two companies, now they have done a JV, we can do 50% sharing with both partners. That's what we can do. Yeah. So that's, I think, like I said, it's a very unique case and it's a very short span of journey.
But yeah, good suggestion. In fact, we should think on those lines also, I guess. It's general trend. Yeah, agreed. Conclude that. So we have done with power company here in, so they also went into JV and then they two big companies combined together worked upon. So it can come into picture. Yeah.
Then your agreement should have both the companies' major promoters to be signed.
So that's what I told. So it should be on the promoter.
Promoters.
Not the
It's,
directors can change in the next.
yeah. It should be on the promoters. Yeah, thanks. Then I think, hopefully we'll collaborate together for more deals.
Sakshi, investments again. So after the event, when we are done with the event, I'll be reaching out to every one of you. I just request you to give your details, contact details at the reception so that we will set up a meeting just to discuss how, in a very exhaustive way, how we can take this partnership ahead. Because we have the capability, but what we are lacking at the moment is the reach, which we believe you can bring for us. Right? Sakshi.
Yeah, thank you. Thank you, Mr. Chandra, for a good presentation, as well as I think it's a very good conversation between all of you. Now I would like to invite Mr. Nikhil Agarwal, partner AKGVG and associate. His topic is transforming enterprises into emerging corporates.
Thank you, Mr. Salunke, and thank you, SME Chamber, for arranging this. The first session, I think, was just brilliant. I think hopefully we can keep the energy levels. Sure, thank you. Hopefully we can keep the energy levels up. I'll try to be fast and not give too much gyan because just to start, I think it was a good context that was set in the previous presentation that happened. It is actually solving the problems of financial advisors by leveraging technology. But there are a lot of things that Chandra sir mentioned as part of the organization that he's a part of, right? What UB does. And as a company, one must look at that organization to understand why the tech came in picture, why they are able to manage so many partners, so many lenders, why they are able to grow, get investments. They are managing 1,000 people, 6 offices, they said UAE as well. So just keeping all of that in context, this particular discussion that I'll have is not really only just for SMEs or business owners. Or like manufacturing units owners, or it's also for people like us. So who are into advisory services, because in itself we are also running a business. So this basic workshop or this presentation is, I believe, is applicable to every business owner who is running something of their own, whether it's an SME, whether it's a manufacturing or an advisory business. Anyone who's running a business, basically. So let's think from that point of view. Just to give you a small introduction about myself, I am Nikhil Agrawal. I am a chartered accountant. I have 15 years of experience in advisory, consulting, private equity, wealth management. UB is something which I've also worked as part of my wealth management experience when I used to work with Avendis. 2020, in fact, was the year, and we have worked closely with the organization to kind of help them raise funds, etc. I also ran my own startup in environmental solution space. We were actually one of the biggest top waste management entities after all the Ramkeys and the Lara of the world. We were one of the top ones in the city. Company still runs, and during this entire experience, I got to understand that there are certain aspects that are required for any company to grow, for any entrepreneur to grow, or for any individual's business to grow, right? There are multiple aspects, but there are certain questions that one needs to ask, which actually comes here, where you're trying to kind of transform your enterprise to an emerging corporate. It is always helpful if you take a 30,000 feet overview. You see your entity or your business as a third party. You put an external lens. If you have the capability to do it, yes. Otherwise, you have an external due diligence partner coming in. But you have an external lens, right? A lot of times we reflect on our own lives that way, whether our life is going good or not. You try to, kind of sit back, relax on a couch, maybe go to Marine Drive, look at the sea and realize that, no, whether my life is doing good or not. Similarly, you take an external view into the business, and you want to actually get into a lot of details to understand which aspect is working, which is not. So idea is to give you some tips and tricks here. And of course, this is a lot of detail, but I'll try to, like I said, I'll try to run through it. Where these tips and tricks or these questions that you ask yourself should be able to help you get those answers, which when you implement, you'll be able to see your business or you as an entrepreneur to actually grow and transform is the word that we're using here. So the question here that one is supposed to ask is, ask yourself a simple question: will someone invest in me, right? This right now, of course, we're talking from commercial angles. So we're looking at debt, equity, IPO, all those kind of investments. But if you look from a slightly more philosophical point of view, we're also looking at, will someone invest in me? Which means, will my partner invest his time in my business? Will I invest my time, energy, and money in the business? Will the next employee that I'm hiring as a businessman, will that person invest his time or money or his entire career in my business? So this one question where we ask, will someone invest in me, should be able to kind of open up your mind for you to able to understand which aspects of the business needs to be understood. Uh, Also, to give you a little bit about why I'm here, like I said, this is my personal experience, which is of almost 15 years. Apart from that, right now I'm partner in a chartered accountant firm, which is a 20-year-old chartered accountant firm called AKG VG and Associates. We are present in about 7 cities and again an office in UAE, where our UAE partners are in touch with your UAE guys in there. Bangalore office is in touch with your Bangalore office, so good to have someone in Bombay also now. And we are about 450 people who are spread across these 7 offices. And I head the Mumbai branch, which is fortunately located right next door. Sorry, am I clicking the right button? Yeah. Oh, got it. This one? Perfect. Got it. Clearly, technology needs to be. So there is strategic planning and a roadmap that one is looking to understand whether you're even investment ready, right? You saw the first presentation. There was a point where Chandra sir mentioned that due diligence takes a lot of time. I believe that due diligence would have taken lesser time if we as business owners or jinke due diligence inki team kar rahi hai, if they would have put their house in order, right, is as good as looking at your wardrobe. If it's all messy, you will take time to kind of rearrange that. But once it is rearranged, you will be able to pick up your next day clothes very, very easily and immediately maybe. So that's very similar approach to your business, that you're looking to put your house in order for first, I mean, that's being the first step to actually being able to become investment ready, right? So basics of funding, of course, one should know what is debt. One should know, of course, now we have technology and people like UB to actually help us do that. What is equity? What is IPO? So this is upskilling yourself or understanding what is applicable to you. What does the market say? Investment readiness, assessment, diagnostic, of course, slightly heavy words, but what you're looking at is aligning your stakeholders, like your founding partners, your team. You're kind of putting them all together to share what your vision is, right? If you don't know what your vision is, how will you take the next step? So you have to align your stakeholders to come in the place together and then see, and then together plan or share your plan with them, right? This seems, we call it the 10-step roadmap, but this seems more detailed, but at the same time, if you go into each and every point, they're pretty basic, right? Everyone who's running a business will know this, may not be by these terms and jargons, but will know how to do it, right? This financial health, you should have your audited financial statements in place. You should have your ratios, understanding all of that. There's corporate governance, where you're looking at policies and procedures are in place. You're looking at maybe your team strength, everything in place. Legal regulatory compliance, your taxes, GST, etc. Operational efficiency, right? How much is your production? For example, if you're a production facility, then you're looking at your streamlining your production facility, not having any bottlenecks in between. If you're looking at an advisory business, then it is similar, right? You can imagine your production line to be the lead generation to actually executing and getting your fees, right? That is your production line. So kind of streamlining that. Risk management, I mean, it's again a jargon, but it's actually somewhere similar to your efficiencies and, understanding what is a business risk. Management team, market positioning, investor relations. I mean, I'll skip through that because I'm kind of covering that ahead, right? But again, coming back to the $1 million question, which will help you to put your house in order, is to ask yourself, are you investment ready, right? The answer is simple. I mean, we've interacted with more than 10,000 clients till date. Answer is simple. No one says that. Answer is never no. No one says that I'm not investment ready. The answer is always not yet, right? No one, at least in India, right? We're all so opportunistic. We're so full of optimism in our life that we never say no. We say not yet, right? So that's the idea. Setting the context for next probably 10 minutes that I have. this is what I'm going to cover. I'll try to make it more basic and quick so that you get the context of it. And of course, post the session, we can meet outside or maybe later to kind of get into the details. This is what I was saying. So Charles Glassman, he mentioned, before you save the world, make your own houses and make sure that your own house is in order, right? A lot of people say charity begins at home. A lot of people say, if you don't earn well, how would you support your family? If you don't earn well, then how would you donate? So this is somewhere similar, right? If you want to save the world, if you have a vision to save your clients, to get them money, etc., right? You have to first put your own house in order. A typical SME organization, like everyone knows what org chart is, right? There is an MD, CEO, VP Finance, CEO, CFO, CTO. But this is, I mean, I'm sure 90% of you, if you're business owners here or if you're part of companies, you would have seen this happening in your own company and maybe your clients' companies. This is how a typical org chart looks in an SME scenario. And this is what I was saying that, a company like UB, when it's running company, people strength of 1,000, I'm sure this is structure. In fact, I know UB closely when it used to be Vivriti and Cred Avenue. And I mean, of course, now you have a lot of brand names. But I know the founders, right? They started with like 2-3 people coming from a organization, putting everything in order. Their company structure also looked like this. Yeah, but probably 4 years down the line, which is such a quick journey, the company structure actually looks something like this, right? Hence, you have a marketing guy sitting here, you have Chanda sir sitting here, we have Yashasvi sitting there, and then you have different team members, right? You're looking at different departments. There is Chennai office, there's Bangalore office, etc. So this org chart, everyone knows, so why can't we just follow it? Point is, how do you follow it, right? So there is something called as DOA, which is Delegation of Authority Matrix, a RACI matrix. These are the terms that we use because we deal with these problems. We are governed by certain ethics and governance and Government of India charter as charter accountants. So we cannot kind of just use any loose terms. So a RACI matrix, where we say responsibility, accountability, consulted, and informed metrics. It simply means like the org chart that we saw in the previous slide. But the idea is that you have the org chart, assume that you have all the designations in place, but you would still want that, okay, I think he or she is the oldest employee, I am more comfortable, I have a better rapport, I'll interact with them directly. So you kind of skip that delegation authority and you move direct to the level. Of course, you will be skipping your CFO and talking to your manager accounts or finance directly, right? So this is of course, I mean, I'll try to skip this right now, but this matrix that you see on the right, this actually is a good way to assess how do you do the tasks and the deliverables, how do you distribute that, and how do you follow the delegation of authority or the RACI matrix. Yeah. No, it's not a bell curve. It's basically a match of one-on-one. So it's more like which activity should be governed by which person, and what is the like the escalation matrix that we typically give, right? So you kind of follow the same, even if you have the luxury to kind of skip that level. A good way to assess is to first understand that in any business, be it, like I said, be it advisory, be it investment banking, be it a manufacturing, there are certain typical business processes that any business would have, right? So we've tried to kind of generalize them here. Of course, there could be 2 or 3 which are not applicable to your business, or maybe 2 or 3 additional that are required in your business. But right now we are saying that even if you're looking at these 7 processes, you are 90% sorted when it comes to putting your house in order. Human resources, everyone knows. Procurement and vendor payments. In fact, that's a problem that you're solving for your partners, right? Marketing, sales, customer service, legal compliance, which you're talking about our GST filings, our audited filings, ROC filings, etc. Production and operations, including QC, which is quality check. Code of conduct, whistleblower, anti-corruption. This is something which most of us fail to implement even in our small businesses, largely because you always think that, okay, code of conduct and whistleblower, all these are large company problems. And, if we have any problems, if my employee has any problems, hey, I'm just, I have an open cabin policy, open door policy. So, you can enter and tell me anything, anytime. But that's actually not the fact. It doesn't happen. Then, of course, you have finance and accounts. All these processes, basically, if you're looking to put your house in order, you're looking at certain standardizations, right? You need to standardize them, you need to make certain protocols, follow certain basic steps, right? So trying to bring it out here in short, just to give you a glimpse of that. For example, hiring employees, right? If your HR is the process, you're looking at hiring employees and you're looking at onboarding new hires. So you have to have process and protocols for how are you hiring, on what basis are you taking these resumes that you're taking, what are the basic criteria for shortlisting. The more and more simplistic or more and more detailed oriented plan that you make, you will be able to delegate this authority, right? Most of us here, if you're business owners, or if your clients are business owners, most of the time you will see that the founder is doing most of the work, or maybe the second in command, like the senapatis of the businesses, they are doing most of the work, right? And if we don't have these systems in place, it gets very difficult to kind of manage a large organization, manage a large business. Or, like, for example, if I give you an example of my business, because I came from a corporate background, I knew that there are certain hierarchies that a company follows, there are certain processes that a company follows. So for me, it was a very basic thing that if I am running a business, if I'm starting a business, these processes have to be there in place from day one. Right. So when my company was just started, I got my first paycheck of 5 lakh rupees when I sold one first machine. In fact, it was to this hotel, Goldfinch. We used to do waste management and solar facilities for this particular hotel. And then, of course, we got Tunga and Tunga Regal, Tunga International, Radisson then came in later. But the fact being that the process helps it so much that 3 years down the line, me and my co-founder, we just took a break because we were too overwhelmed with what was happening in the business. We wanted to kind of take the 30,000 feet overview and understand what's going on in the business. How do we grow? What next do we do? So we took a break. Me and my partner, we love the sea. We went to Goa, hung out together, thought that we'll do some strategic thinking there. Of course, we couldn't because of a lot of factors around there. But then we realized that 3 days we're not getting any calls from our supervisors and managers and clients. And we're like, boss, company बंद तो नहीं हो गई? हम यहाँ पे गोवा में chill कर रहे हैं. And I don't know if the company is shut. I mean, are they? Or is it the fact that, the mice are at play when the cats are away, right? So we were pretty scared. It was a 4-day trip. We cut short it by a day. We came back and we saw everything is in place. And we were surprised. We obviously had a FOMO, right? That maybe our guys don't require us anymore. But that actually made us realize that our business is now automated, right? There are 75% of our business, 75% of our cash flows are actually automated. We don't have to be there. We don't have to be at our site anymore. The laborers, we had 150 blue-collar employees, right? They were following certain SOPs, cleanliness SOPs, your uniform SOPs. The hiring was happening automatically. There were 25 people that were hired only in those span of 3 days. And none of us got a call, like, so can we hire them? They're asking for so much budget. Because we had given a range, we had got into so many details of a hiring process also, that they had clear bandwidth. They had a clear range that, okay, this much employee, this much experience, this kind of education will have a salary range of this to this. So we had gotten into so many details that we were never called. But that made us, help us grow multiple times in the next 2 years after those 3 years. So I think I'll probably spend a little more time here where I'm talking about one process involves what all. So we saw 7 processes there which need standardization. But to get into each process, like everyone knows, okay, there is a manufacturing line. We first need to understand what is our as-is basis situation, right? Everyone has a manufacturing process. What is the process that is being followed and what is our dream process? So what is the gap, right? It's something like I am 100 kgs, but I need to become slightly fitter because I need to take care of my health. And I need to reach, say, 75 kgs. So that 25 kgs is my gap. So what is the process that I'm going to follow? I'm going to wake up on time. I'm going to eat XYZ things. I'm going to work out. I'm not going to hang out with people who love going to KFCs and McDonald's of the world. So that's a part of a process. It's as simple as that. Then you develop a certain process. Basically, when you identify the gap, you're developing that process with, of course, those RACI metrics and those kind of instructions. you're validating that process, that what you've set, is it working for you if you try to implement that. Once you implement it, you'll realize that there is a lot of, there's a lot of pushback that comes, right? Because everyone knows resistance to change is huge, right? When you don't have dictatorship. We all are good at heart, so we typically try to ask people and then implement, even if it's our employees that we're dealing with. But that exactly means that, once you validate, you have to train the people who are actually going to follow that process that you've set. Then you monitor if process is being followed, where you've implemented. Are there any gaps? Maybe if there is any leakage happening in the entire process, and then you improvise and adjust. Right? Again, like the words look very heavy, maybe, but if you take it to a very basic example in your life, which I said, a weight loss program, right? Everyone's obsessed today with that. This is exactly what you will follow. Like if you think what you're doing for that particular activity, this exact process is what you follow in your life, then why can't you follow in your business? Financial control, then we are looking at, I'm trying to give you a certain example here that now that you have your processes in place, you're looking at controlling them, right? So there are three levels of controls that we're talking about. One is at the entity level. One is operational control, and then something that we typically miss is the fraud control. Entity level control means tone at the top, right? Ki bhrashtachar nahi chalega, right? You just have this tone at the top. Now, whether you have any process around it, of course you should have it. But your first level, which is tone at the top, is saying that there is no corruption that is going on in my office. As simple as that. So we're talking about those level of controls there, where tone at the top, they actually control or they design your control process. Operational control is somewhere, you talk about your production, procurement, and sales. So those are the operation part of your business. Fraud control is typically, like we say, right, if you take our health example again, you always have heard since our childhood days, prevention is better than cure. So kind of preventing that fraud to happen rather than curing or putting a cure to it once the fraud happens, right? If you're able to protect or prevent it from happening, then you're saving millions and billions of not just yours, but your employees, your investors, your lenders. So early detection, there's a way to do it, and that's basically governed by your fraud controls. And why should you do it? Of course, the great man has said it takes 20 years to build a reputation and 5 minutes to ruin it. And haven't we actually experienced this in our life, even in our personal life, right? Something that happened and you've kind of built that relationship, whether with your clients or whether personally, and it's a 25 or 30 year, 50 year relationship, and just take 2 seconds to kind of just destroy it right in front of you, right? So if you think about that and if you implement that in your business, then you'll start looking at it in a very different way. Just to give you a small, kind of example of what I'm saying again, like zero tolerance. Unfortunately, I took the same example, which is good that I'm sharing my ideas with the current government in power. But that's what I'm saying, the tone at the top. So this person is talking about control level in the country. So why can't we have that control level in just our company, right? Just wanted to touch base upon, a process for making your whistleblower complaint. So we as a firm, we take pride in being one of the non-big fours who is closely working with a lot of companies, SMEs, to have fraud control, fraud detection, fraud risk assessment, whistleblower policy, all of these things, forensic, all of these things in SME level also, which is unheard of, right? So this is something which I think maybe we can share the deck later, so maybe you'll have an access to it. But a whistleblower policy is basically that there is something happening in your organization, right? Maybe it's covered in the next slide, which I can take it up. Yeah. So, just to give you, put a little kind of humor here is, there is something happening and I have discovered it. Okay, there's something happening in the organization and I want to report it. So I talk to my friend or I talk to my immediate senior and I say that, okay, is it something that I should report? Then the person is saying, hey, is it too much? Would it destroy something? Then hey, why don't, I mean, just leave it here. I mean, just forget it. Don't report it. But the point is, if you still want to report it, what is the mechanism? There are a lot of times that you cannot tell the owner of the business, or you cannot tell your senior also to a great extent, that something has happened and I'm aware of that. Two reasons. One, because you fear that your job will be lost. Second, the fear is that, okay, this guy is not going to talk to me forever if I report him, right? And most of the times we've seen this in law, at least in our firm, when we work with our clients, we've seen this a lot of times in cases of POSH, right? Sexual harassment cases. A lot of people cannot report it because one, they don't even know, like, I'm not pinpointing on any gender, but the men and the women, right? They don't even know what gets covered in sexual harassment, right? A simple thing like even putting a hand on a shoulder. If I'm comfortable with my colleague, I might do it. But that is sexual harassment, right? It's company policy. You can't do it anything. So one is to understand what is supposed to be reported. Second is to know how to report it. Unless all these things are there in your company policy, there is no way that reporting will happen, right? And that's exactly what we are saying, that the reporting mechanism needs to be in place, which exactly is the whistleblower policy. So this is what I'd kind of covered. Reportable misconduct, some examples, fraud, bribery, collusive practices, conflict of interest, abuse of power, which, these things are very typical in an SME business scenario. Okay. Yeah, please go ahead, sir.
That's an interesting concept.
Yeah.
You are presenting a big organization. When you are saying SME cover a very large.
Of course.
So, how far it is, maybe affordable to them, or maybe you are offering services, how it is practical for them to make. I mean, you can share some of the things which is, those who are growing, you can start thinking on these lines.
Yes.
In the early stage.
Absolutely.
Then the question of affordability will come.
Yes. So affordability, like I said, it's not that you're kind of taking the entire package and putting it all in place. As consultants also, right? Like I gave an example when I was a founder, when I was running my own business, it was a 5 lakh company. We still had those processes, right? But as a consultant, as an advisor, when I'm looking at any client, when we talk to them, of course, we present the 7 processes. It's not practically possible, not affordability, but majorly affordability of time. Because you as business owners or your second in line in command will have to interact with us almost on a daily basis. You might have the money, but you will definitely not have the time to do that. So we typically ask you to assess or get us that one key process in your 7 processes. Let's attack that, experience that, see the value that it is giving you, and then you'll automatically know that this is affordable. To give you a very small example, which I've faced, as a wealth manager, right? You would take a 5 lakh trip to Australia. What does it give you? It gives you an experience. That's it. Does it have any ROI? It doesn't. So why does it that when we look at our business or when we're looking to pay our advisors, why are we looking at an ROI? It's a certain experience that is going to stay with you as your team or as your business. Is going to stay with you for next 10, 15, 20 years. And it's a one-time process. So it's a mix of affordability of time and cost, but I think it's more of what the value it is giving to you. Once you realize that, you'll be able to kind of see what kind of growth can it get to your business. Which of course, we will definitely take you through that growth journey. And the biggest example I could give you is like my own business. This was just to give you certain examples, which I think if I had time, I would cover it a little detail, but in interest of time and probably a little bit of hunger that all of you would have, I am happy to skip through it. So this is what I was saying, that once you have processes, once you have certain things, there's a certain code of conduct that you should have. And in our experience, these are the typical 6 areas where you should have a certain code of conduct. If you have these code of conduct and every employee or every founder is actually abiding by it, then you know that, okay, these things are allowed and these things are not allowed. As simple as that. Other thing is, like, just to
of course, there are certain processes which are not so big, and there are certain processes which are very big and repetitive, right? A point that you also mentioned, that certain times, when olden days you used to do certain evaluation manually, but now you have technology, right? So that's a small process which became very large. You wanted to bring in efficiency, so you put in a tech in place, right? So that's automation in a way. If it's not very big, then you're looking at outsourcing it. Whether you're looking at finance, HR, you typically outsource it. AP, AR, no, AR was a process which, UB, like you mentioned, was a big problem, and you've kind of solved it. Repetitive and extensive processes can be automated. This is what I'm trying to bring here. Of course, it's a huge discussion, but here I've tried to give you, because of course I'm a chartered accountant, so I can't control myself from talking about this bad term that has come as a virtual CFO, that hey, I'll be virtual, but I'll still be watching a business. But yeah, this is a huge practice that is getting outsourced, which is your outsourced CA or outsourced CFO, who's helping you take financial decisions. Again, most of us would know it, but in interest of time, I'll kind of run through it. Various processes, just try to bring it here, that how automation or softwares are used, right? Tally being the basic one to actually get your softwares in place. Otherwise, 30 years back, we still had something called as Wahi, in which we used to do accounting, right? Travel and expenses can be also, automated using softwares, logistics, onboarding process. You have AI solutions now to take interviews, right? Yeah, so I think this is what is concluding to kind of give you the effect that a small organization is typically looking at limited focus, scaling is limited, there are limited or no compliances, poor marketing, you're doing most of the things yourself. But if you're looking at a process-driven organization, which we've not said small or large, we're saying small organization versus a process-driven organization, no matter whether you're small or large. This is one place where size does not matter. So, you have competent and committed team, you're looking at, key business processes, you know what to attack, what not to attack if something goes wrong. You have optimization of resources, you're accordingly, kind of controlling your cash flows accordingly, indirectly. And then you have better monitoring and governance as end of the result. Yeah, I think that was the fastest I've spoken. But yeah, thank you. Thank you so much, guys. Perfect. Thank you so much. Thank you. Thank you.
Now I would like to invite Mr. Chandrakant Salunke, Founder and President, SME Chamber of India, for the closing remarks.
So I will take at least 1 hour. Is it okay? It's very interesting, Mr. Agarwal, your speech, because this is my rather topic and my favorite action plan for transforming enterprises into emerging corporates. So you must be seeing the credit marketplace. Mr. Chandra has given you, rather it is a record, must be there, and 1 hour and 30 minutes or 40 minutes your presentation, which was converted into workshop maybe. Because there are many stalwarts from the finance sector, and they had shared a lot of questions. And of course, this is useful for us also and for the others also to understand how and when and where to reach particularly. Today morning, I met one of the CEO of leading NBFC, and they said they are putting a lot of efforts to enter in SME sector and manufacturing industry. They are doing a lot of business loan, other loans, but it is not easy to reach out these kind of sectors, because they are not aware about what are the facilities available, formalities available, compliances available, and how to tap or how to reach the financial institution for the to avail the services. Somebody asked question, are you ready for finance or ready for credit? You ask me, no? Or you ask you?
That was the theme of
Means whether you are ready, because most of the Indian companies, especially SME sector, and even those are having a turnover say about 5 crore, 10 crore, 20 crore, they are also not ready to approach any financial institutions. Rather, we are getting a lot of inquiries, and rather we are searching a lot of companies. Those are ready-made for particular JV, contract manufacturing or technology transfer. But I observe that many companies in India are not, they are not rather, interested, or they are not ready, or they are not understanding to avail this kind of opportunity. Government of India, particularly Ministry of Commerce and Industry, Ministry of MSME, Ministry of External Affairs, they are, preparing a lot of action plans for this Vikasit Bharat. In Vikasit Bharat, I observed that a lot of, the action plans created by the government, especially for the manufacturing industry. They want to create a level playing field. They want to transform the ease of doing business. So ultimately, the first step is finance. Even I met the finance secretary. I suggested, there are 6.5 crore MSMEs. Hardly, I think, 50 lakhs MSMEs are enjoying finance. What about others? So they are not reaching to the financial institution, or a financial institution are not reaching to them. So this is a big gap. That's why we are invited UB. So you with a UB, so that you can enjoy the further facility. I know a lot of people, a lot of entrepreneurs, a lot of present delegates. They must be having the cooperation. But I know the Gaurav Kumar, the founder of this company. When I met him recently, he said, I want to create a platform, better platform than that, where all industries, SMEs will get a reasonable funding, affordable funding. Because they are, negotiating with the financial institutions, particularly for the channelizing the funding. So thank you very much, Chandraji, for giving a nice and very useful presentation, and thankful to all of you, particularly to participating in the workshop, which is useful for the others. So let us have a networking dinner together. Then we can have a question answer while that. Thank you. All the best.